And we believe that part of the opportunity has not been tapped. And just to put some numbers on this, right now, we're approaching 20 million Bitcoin outstanding.
Which means?
The number of Bitcoin that have been minted over time by Bitcoin miners.
Hey guys, welcome to Everyday Finance. Cathie Wood and other analysts are keeping a close eye on any indications that Bitcoin may be on the verge of a significant rally, with the possibility of reaching a price of $113,000 by the beginning of July. This bullish outlook is heavily dependent on whether or not the job market in the United States shows signs of slowing down. How come? As a result of the fact that weaker job data would likely encourage the Federal Reserve to reduce interest rates sooner, which has the tendency to boost riskier assets, such as Bitcoin. Especially after more than $5.2 billion flowed into U.S. spot Bitcoin ETFs in May, which drove prices up to nearly $112,000 before a slight retreat. Investor optimism is already strong for the time being. In spite of a slight decline to approximately $104,000, the sentiment is still high, as evidenced by the Crypto Fear and Greed Index, which continues to lean towards greed. It is possible, however, that this optimism will quickly change. The Federal Reserve may choose to postpone rate cuts in the event that upcoming job reports reveal unexpectedly strong performance. This would bolster the value of the United States dollar and cause Bitcoin to fall, potentially reaching a price of $95,000 or even $92,000. As a result, the data on the job market might represent a significant turning point for Bitcoin's short-term trajectory.
Yes, it was in the summer of 2015. We got in at roughly $250. Today it's $104,000, I think, roughly. So we did get in very early. And we knew we were onto something, really, when people were making fun of us, saying, "Okay, that's a marketing trick. You're new to our business, and new to the new fund world, and you're trying to attract attention." And we were thinking, "Wow, they have no idea how much research we've done on this." And Art Laffer, my professor again from USC, we had him read our first white paper on Bitcoin. Bitcoin. Could it serve the three roles of money? So means of exchange, what we use every day to buy things, store of value, like gold, and unit of account. Would prices be quoted in terms of Bitcoin? Chris Berdinsky was our first analyst on Bitcoin, wrote the paper, Art read it, and added to it enormously in terms of economic theory, which was great for us. And then he said to us, he said, "This is what I've been waiting for since the U.S. closed the gold window in 1971. A rules-based global monetary system, like Bretton Woods under the gold exchange standard." And I said, "Art, that's a very big idea. How big is it?" And he said, "Well, how big is the monetary base of the U.S.? Back then it was $4.5 trillion, and Bitcoin's market cap or network value was $6 billion. And I said, "Okay, that's a very big idea." And we were trying to get it into our portfolios. Regulators were hesitant, but I bought it right then for myself and haven't sold it, and I'm very happy with it.
You bought it for yourself personally?
Personally, because
what
we
price?
couldn't buy it. $250. So we couldn't buy it back then, but we finally got through the regulatory process. And we were able to put, the New York Stock Exchange said, okay, you can put a 1% position in the portfolio. And it was of a grantor trust called GBTC. So we did, and we just never sold it. They didn't tell us we had to keep it at 1%. So at this price, it's about a $2 trillion market cap. And so halfway to that original $4.5 trillion, but our price target actually has expanded since then, because it's not just a global monetary system. It is a new asset class. And that's a very big idea as well. What makes a new asset class? And we haven't had one truly since equities in the 1600s.
When you say a new asset class, you mean a completely new category of
funding
asset.
Companies, yes, okay. Right? Well, it would be like stocks, bonds, commodities, real estate. This is a new asset class, and most people will agree with that. We did a study on it. If this asset does not perform like other assets, in other words, it provides diversification for funds. And because it is behaving differently, institutions have to consider it because they're competing against each other. And if one puts it in, they all know they're competing against each other. So others have to consider it. And we believe that part of the opportunity has not been tapped. And just to put some numbers on this, right now, we're approaching 20 million Bitcoin outstanding.
Which means?
The number of Bitcoin that have been minted over time by Bitcoin miners.
Despite the fact that investors are primarily concerned with economic data, one of the most significant threats to Bitcoin may actually be political. An important warning has been issued by Pav Hund, a lead analyst at Swift, that the ongoing tariff threats made by Donald Trump could constitute a significant obstacle for Bitcoin bulls. Already, the markets have been shaken by the uncertainty that surrounds the possibility of new tariffs, particularly those imposed on steel and aluminum. When President Trump increased his rhetoric regarding tariffs earlier in the year, the value of Bitcoin fell below $100,000 and remained volatile for several weeks. In spite of the fact that a court ruling temporarily halted some of his plans, Trump has since redoubled his efforts, which has rekindled investor anxiety. The problem is not just the tariffs themselves. Rather, it is the length of time that policymakers in the United States might wait to act on new data. Because of their reluctance to implement clearly defined economic measures, any monetary easing could be delayed, which would keep Bitcoin and other assets in a state of uncertainty. In the absence of clarity, this period of waiting could potentially halt the momentum of Bitcoin and ensnare the market in a state of uncertainty.
So institutions really just started considering Bitcoin because the SEC gave the green light to Bitcoin with the approval of the spot Bitcoin ETF in January of last year. And it takes a while for institutions to do their research and commit. And so they're just now committing. And there's only $100 billion of new market cap that is going to be created, whereas they have trillions of dollars under management. And so we think there will be a lot of incremental demand. And to satisfy a lot of that demand, someone's going to have to sell.
Which means the price goes up.
Which, yeah, if people don't want to sell, because Bitcoin's been awfully good. And our forecast right now, the Bitcoin's around 105,000. Our forecast for 2030 is $1.5 million. And we do that, the building blocks for that, the three biggest building blocks are institutional, which has barely started, store of value or digital gold. Young people are much more comfortable with digital gold than gold. Yes. And then the very important use case that many people do not discuss is how important Bitcoin and stablecoins, which are backed by U.S. Treasuries, are going to become to the emerging markets. In emerging markets, many of them are at the whim of policymakers who show no discipline in fiscal or monetary policy. And so they're used to going through booms and busts and booms and bailed out by the IMF, and they need an insurance policy.
So if you're in Venezuela, you need a currency that's going to be stable. Exactly.
Well, this Bitcoin is, so stable coins are stable vis-a-vis the dollar. Bitcoin is more of an investment because it does appreciate over time. Now you go through, it's volatile, no question, and that's the first thing people have to know about it. But it is becoming less volatile as more and more investors hold it. It's a very big idea because it is a new asset class. It does represent a global monetary system, unlike any other digital asset out there. It is backed by the largest computer network in the world. The layer one, which is the base layer, has not been hacked. Think about that. Since 2009, when it was released, not been hacked. How many systems can say that? And it is a technology. It is native to the internet. And again, digital assets, or any Bitcoin, Ether, Solana, all of them exist because they're vying to be the native currencies to the internet and to enable smart contracts and really transform the financial services industry.
Why did you invest in Coinbase?
Coinbase is an exchange for digital assets and increasingly derivatives. It has gone global. It just bought Deribit, which is the largest options exchange out there. And it owns a futures. So it's really going after the derivatives market, where there's a huge amount of activity, which is fantastic because it's all legitimizing digital assets. And it is the most regulatory compliant exchange in the world. Binance is another major exchange, but has had more run-ins with regulators around the world and really hasn't been allowed into the United States. It also wants to become part of the new payments infrastructure, and so is evolving strategies that way as well. We've gotten to know management very well. They fought the fight against regulators in a magnificent way, and they have educated policymakers, importantly, who understand that this innovation, we almost lost this innovation to the rest of the world because of our regulatory stance. They've helped policymakers understand that, hey, this infrastructure is what developers did not build into the internet in the early 90s because they didn't know finance or commerce would take place. That's all this is. It's that simple, right?
As a result of concerns regarding inflation and employment, the Federal Reserve recently maintained interest rates at a range of 4.25% to 4.50%. Because of this cautious stance, as well as the political ambiguity that exists, it is becoming increasingly difficult for Bitcoin to find a stable footing. However, analysts such as Hund believe that Bitcoin could experience a significant surge, possibly reaching a price of $120,000 in just this month alone if job numbers continue to decline and political clarity finally emerges, particularly if Trump's tariff pressure is reduced. The bulls of Bitcoin are climbing uphill until that time comes. The direction that the market will take for the remainder of the summer could be determined by two important factors: whether or not the Federal Reserve finally signals that it will be cutting interest rates, and whether or not political tensions calm down. There is a high probability that volatility will continue to exist until those stars align, with bulls and bears competing for control in a macro environment that is becoming increasingly uncertain. Currently, investors are paying closer attention than ever before to both the data and the headlines.